All right, we are good to go. Welcome back, guys, to We Talk Money. I'm your host, Chris Dunn. I'm here with Travis, the stock geek, and Nikki from She Talks Finance, certified financial planner. Holy crap, we've got a lot to talk about today. Woo! All right, where do we even begin? Let's start with Nikki's background image.
I had to. Come on.
GME is the story of the 20s so far. I mean, this thing just went so mainstream that literally every news channel, every pundit, every talking head was talking about it. The world woke up to what short selling was, what squeezes were. I mean, the entire world basically came into our world.
Yeah, it was hilarious. I had family members messaging me, hey, do you have any of that GME? Granted, this was when it was up at, $350, $400 a share or whatever. And, friends text messaging. And when that stuff happens, you know that a top, beware of the top kind of situation, kind of how Bitcoin was back in 2017, right? Like, it's just one of those signs.
We need a name for that, like the friends and family indicator. When you start to get your uncles or your friends who never pay attention to the market start texting you, hey, should I buy this stock? Friends and family indicator.
I heard from no less than a dozen people, like I call them normies, people that aren't in the markets every day, asking about Doge. It's absolutely insane. They people actually thought this was like a real coin with a use case, and they didn't understand it's a meme coin. We'll get to that, but why don't we just back up, zoom out? I know probably by now a lot of people have heard different opinions on what happened with Robinhood and GME. We can do our opinion on that and kind of a quick synopsis, but just to kind of go back and talk about what happened from our point of view. So Travis, you called this back in August. You said GameStop's in rough shape long-term, but in the short run, they have plenty of liquidity to stay alive. Meanwhile, it is the most highly shorted stock in the market with over 90% of the float short at that time, which actually went higher. GME has the potential to be an absolutely epic multi-bagger short squeeze. And you and Nikki both bought it in the fours. So congratulations. That was absolutely amazing call. Now, great. But then I know you guys didn't hold it all the way up, which is fine.
No.
Trav, why don't you just tell us what the hell happened, and should we be having our pitchforks out with at Robinhood? Where do we go from here? Take it from here, man.
Well, I think it's interesting because this is in some ways not a unique situation, but in other ways a very unique situation. So I've seen a lot of different short squeezes in my 20 years in the markets, and some of them can be very violent. Unfortunately, in 2008, I was on the other side of one of the most famous short squeezes, which was the Volkswagen short squeeze, when the stock went up 500% in one morning. And our hedge fund had to actually cover some of our position because that position had gotten pretty big and it was costing us money. Thankfully, we had started at a small position, so it didn't like kill the fund, but it was an interesting lesson at the time, which is that, there's unlimited risk basically if you're short a stock, especially one that has high short interest and a low float. So, in recent years, we've actually been looking for situations to get long where stocks are heavily shorted, where the fundamentals are maybe misunderstood. And that's exactly what happened in GameStop. GameStop was seen by many people over the last few years as a dying retailer, similar to Blockbuster. Or similar to any other retailer like JCPenney, maybe that went out of business, lots of brick and mortar stores. But what was interesting about GME that I saw over the last, probably year or so was that, the balance sheet wasn't that bad. The management team was working on a turnaround plan. You had some new board members that were also trying to help them. And then you had this just absolutely insane level of shorts in the stock. And so the stock was already down, 90% over the last few years. And they were headed into a gaming console cycle, which would bring people back into the store, at least, to some level. So there was potential for some growth and for some cash generation. So I saw this and I was like, man, this thing is left for dead, but, it's not necessarily, I don't think that's all there is to the story. And technically, you've got these factors like the shorts that can make this a really explosive upside scenario. So that's why I tweeted about it in August, and why some of the people like Nikki and myself got in. Unfortunately, to be honest, I sold way too early, like I often do in these situations. But I thought $20 to $30 was like the upside case here, not 300-400. But ultimately, one of the more unique parts of this situation is that social media and the rapid spread of information has now created a kind of a unique ability for people to stampede into assets like in a very short amount of time in a way that I don't know that we've had before. So with the WallStreetBets phenomenon and everybody stampeding into the situation at once, it created just this absolutely explosive situation, not only for the stock itself, but for the brokers who are trying to deal with unprecedented volume, and for hedge funds and other, maybe investors that are on the other side of this trade. So there's a lot of players in this story, some of whom I think are being misrepresented. And I think there's a lot of like misunderstanding around what exactly happened. For instance, with the brokers like Robinhood, right? A lot of people were very angry last week. Politicians, pitchforks out calling for Robinhood's head because, to be fair, Robinhood has always paid for, or they get paid for order flow. That's how they make money. I mean, how do you think they offer free trades for people, right? They send their order flow to brokers like Citadel Securities or market makers like Citadel. But that's a pretty well-known and understood thing. I don't know why people were upset about that part of it. I know people got upset because they shut down trading in some of these stocks. And it was really shady at first. It was really shady because the whole idea that they route their order flow to this company, Citadel, who also, by the way, had this investment, this bailout investment in one of the funds that was on the other side of the GameStop short, that raised a lot of eyebrows for good reason. But it turns out when you peel back all the layers, what really happened was that, brokers like Robinhood, when there's a high volatility in stocks, they have to post collateral with the regulatory agencies and the clearinghouses. They basically have to come up with money, from the company themselves that can cover the risk of these volatile trades going against some of the broker's clients that the broker would then be on the hook for. So Robinhood had to halt trading, and so did several other brokers, because the amount of collateral that the clearinghouses were asking for was billions of dollars more than they would normally have to put up. And Robinhood, being still a relatively small company, didn't have the capital at the time. So that was really what happened, but the optics of it were terrible. The CEO did a terrible job of being transparent and explaining it, and they deserve a lot of the criticism, frankly. But yeah, and now this trade is unwinding. People that were buying at 300, 400, 500 after it was already up thousands of percents in the last couple of weeks, I think we're making a grave error in that, like, GME at $4 is a very different type of trade setup than GME at 400. If you're yeah, sorry, I've been rambling.
No.
Please. I mean, look, there's a lot to unpack here, right? And I'm sure no matter what we say, there's going to be people that disagree with whatever opinions or conclusions we come to about this. The one thing that I'll say, this is my take, is at a minimum, this was just like you said, the optics were absolutely terrible, and at a minimum, it exposes the weakness in the entire system. Why the fuck should I, as a trader, have to worry if my broker is properly capitalized? And why should they, at their own discretion, be able to shut off one side of the market? At an absolute minimum, even if there was no foul play, that just exposes a massive weakness. I'm not convinced that Robinhood is completely innocent here. I mean, I think the truth will come out in time. There's going to be hearings. There's going to be investigations. There's going to be, class action lawsuits. And it exposes so much, right?
Yeah. And Nikki and I are both on record as not being fans of Robinhood, months and months prior to this whole debacle, because I've never really liked the idea of payment for order flow, because I actually can see it in my own orders. And especially with certain more liquid orders or options orders, I could see when when my orders wouldn't fill, even though they were, at market prices or very close to the ask or something like that. Whereas when I use a broker that I actually pay commissions on, it executes. And so there's things like that. Robinhood had many platform outages all the time. This is a broker that's only been around for a couple of years. And they like to talk of themselves as democratizing investing and all these wonderful things. It's like, Robinhood, we've had E-Trade since 1998. Like, let's be real. Like, we've had the ability for retail traders to trade stocks forever, or not forever, but, for more than 2 decades. What you're doing is not that new. You just made it a prettier UI on the mobile phone, but you've got some real problems with your business model. And now you've got some real problems with PR and your CEO, who I think needs some coaching on how to handle situations like this. So I think Robinhood deserves a lot of criticism. I do think maybe, some of what happened was we need to step away from some of the crazy aggressive conspiracy theories, because there are real things that happened here that other brokers had to deal with as well. You saw other brokers like TD and IB have to shut down trading for a little short period of time. So this wasn't just a Robinhood issue, but at the same time, like, what a terrible way to handle it.
Yeah. Again, at a minimum, it exposes a lot of the weaknesses in Robinhood's specific business model, and also just the systematic way that, clearing works in the stock market. Like, this is why I think we should tokenize and decentralize all markets, decentralized exchanges, remove counterparty risk, right? Like, a lot of people didn't even realize that because of volatility, a broker could become insolvent, right? Like, these are things that, especially, newer traders that came in over the last couple of years through Robinhood, and to their credit, they did kind of gamify investing, right? But they pulled in a lot of new people, but they also did it kind of recklessly. They made it so easy to get into options, which are a highly complex and very, very competitive landscape. So they just made it easy for people to get led to slaughter, right?
And easy to get margin. I mean, it was literally a click of a button, and you could have margin and you could trade options. And it's just like, I think that it's interesting how, the fact of the matter is Robinhood, most of the users on Robinhood were actually newer investors, and they were most of, the WallStreetBets community. So it was almost like the people that Robinhood were serving were the ones kind of destroying them. So, because now, look, Robinhood's basically reputation is a bit tarnished now. And I think, though, with like Travis said, we have seen brokers have to step in when volatility gets crazy. I mean, I think even back in March, we did see some brokers have to make some adjustments to margin requirements and et cetera. So yeah, the brokers do have the right to adjust if they need to and protect themselves and their customers. But there's a lot of emotion here, because a lot of these traders were thinking, if they were new traders and not necessarily sophisticated traders, but also they were thinking, if they never stepped in, if the brokers never stopped this, Robinhood would have GME would have mooned to $1,000 a share. I've heard people say it was going to go to $10,000 a share. And I think what a lot of people were missing here is, even if the brokers didn't step in and say, sure, there are actually still people short this. So maybe it could have spiked to $1,000 a share. But what people aren't understanding is it wouldn't have necessarily stayed up there, right? Yeah. And that's where you have the huge capitulations that make people lose a lot of money. And, I don't understand how people, I guess I do understand how people thought this, but there wasn't enough, there wouldn't have been enough buying and enough demand up at those levels to keep it up there. And eventually this would have happened.
We say over and over and over not to buy parabolic charts where everybody's on the same side of the trade. We saw this in cannabis in 2017, 2018. We saw it in crypto in 2018. Yep. We see this in some asset every single year. We saw it in GME this year, AMC, whatever you want to call it. This is a classic market pattern. So if you're newer to the markets, I think one of your first rules that you should understand is don't FOMO into a parabolic chart where everyone else is on the same side of the trade and you are late to the trade. Because in almost every situation where I've seen that play out, unless you are just an absolutely fast, scalper that gets in and gets out in a very, very short time frame, you end up as a retail investor, as a novice investor, on the short end of that stick, because inevitably everybody rushes for the exits around the same time, and most people don't get out without a massive loss.
And I think what a lot of people misunderstood here was the sheer just, it was magnificent of a move. It was the stock was up over 2,000% in a matter of a few weeks. And I think that what a lot of people need to understand is look at prior runs, prior short squeezes, prior parabolic moves, and look at the percentages that they moved over a specific period of time. And that can kind of help you gauge what is a normal percentage move in a stock and what is abnormal. And GME was surely an abnormal move so far, so fast. And when you start getting involved and you're buying a stock after it's one thing to buy a stock after it's up 100%. It's another thing to buy a stock that's up after it moved 2,000%, right? And that's what I feel like. There was just no risk management at all with a lot of, and I guess I'm jazzed about it because I know people personally that definitely didn't consult with me and just went and bought it at $350, $400 a share, thinking this thing was going to moon forever because WallStreetBets. And that's just so frustrating because, when you do understand how price action moves and what's a normal move in the market, as an experienced trader, okay, I'm not touching something that just went parabolic 2,000%, right? Like your risk to reward is terrible.
This is where narratives are so dangerous, because I know there's somebody out there that's listening to you say that and going, but Nikki, it's different this time. They, they were so heavily shorted and it was overextended. We were squeezing them and everybody said they were going to have diamond hands and hold on. And we're going to take this to $10,000, right? If somebody that's listening to this is thinking that right now, let this be a lesson that the narrative that you buy into, if it's biased and in agreement, like Travis said, with the mass majority of people, it's a crowded trade, even if it's a short squeeze, even if it's Bitcoin, even if it's blah, 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 insert narrative, right? And when you find yourself buying into whatever the popular narrative is, and you're in agreement with the herd, sure, you might be able to ride a trend and you might get lucky here and there, but the risk goes through the damn roof.
And I got tons of hate, commenting about that, hey, be careful when you're buying, parabolic tops that are up as much as they are, as much as this one was. I had to block people. I had to delete people, because people were really, really mean about it. And that's because there's so much emotion involved around this thing, because most of the people involved in this are not experienced traders. They're amateurs. They're new to the markets. This is probably the first trade they've ever made in their lives. And with that comes a lot of emotions that people have to be confronted with and deal with. And the other thing about that is I had mentioned as well, people that were expecting it to stay up, when it did start to kind of roll over, those traders don't have a hold of their emotions in that sense either. They say they're going to hold and have diamond hands, but guess what? When you see you're down 50% of your position and you've given back all of your gains, you're probably going to feel those emotions, and you don't give a crap what WallStreetBets is telling you to do. You're going to panic out, and that's going to create a cascading selling effect in and of itself. And that's exactly what happened.
Yep. Can I talk real quick about the hedge fund side?
Yes.
Yeah. So, by the way, let me preface this for anybody that's newer to the show. Travis had a decade-ish at hedge funds, helped grow a hedge fund from 100 million to over $1 billion. He understands that industry very well. So whatever he's about to say, know that it's probably better informed than almost anybody else out there that you're going to hear from.
Thanks. Yeah. So I guess the first thing that's worth mentioning is like the idea that hedge funds are sort of one group of people that are like hive-minded is actually sort of misleading, because there's like 5,000-6,000 hedge funds globally, and many of which do very, very different things, different strategies. Some run completely hedged portfolios. Some are quantitatively based. Many funds, there are thousands of funds that are long short equity funds. And you've had hedge funds on both sides of this trade. I know we like to say, stick it to the hedge funds, like they're all short GME. Actually, I bet there were probably more funds that were long GME, especially below 100, than there were short GME. But one of the interesting things is this narrative took over and everyone was like, the hedge funds are all still short GME. Look at the short interest. But when you, the filings that hedge funds have to file with the SEC that shows their holdings only shows long positions and positions that where they're long options. So you can see if they're long puts, long calls, or long stock, but you don't see if what stocks they're short, and you don't see it on a real-time basis. And so for people to have read into this thinking that even let's take Melvin Capital, they did have a long put position that showed up in their 13F filing, but no one actually knew what Melvin's position was. During this whole thing, no one knew if Melvin was still short GME, when they covered GME, if they covered GME, and everybody was talking as if Melvin and all these other people were still short GME a week ago. But the truth is nobody really knew. Nobody really knew. It was all speculation. So there was so much misinformation around what people were saying the hedge funds were doing. And again, to say hedge funds are doing this, hedge funds are doing that. Tell me which hedge fund you're talking about. There's like 6,000 hedge funds out there. I actually called a few friends of mine last week, or I think it was Thursday of last week, just to make sure they were okay, because there was a lot of degrossing happening. Hedge funds were having to reduce the exposure on both the long side and the short side of their portfolio just because of the market volatility. And so I called a few of my buddies at hedge funds, some of whom know some of the investors at Melvin Capital and D1 Capital and some of these funds that were mentioned as being short GME. And I said, hey, are you guys okay? Like, are you, how are you positioned? None of them were short GME because all of them know better. You know, a lot of them went through some of the stuff that we went through with Volkswagen in 2008. So they know not to short stocks that are 90, 100% float short. So most hedge funds are smarter than that. And if they do take a short position in something like that, it'll be via put options where the risk is limited. So they were all fine and they were kind of laughing at the situation. And they certainly weren't long. They weren't long or short stocks like GME, AMC, BBBY. Most of them are long, like large liquid companies like Facebook, Apple, Microsoft, software companies, things like that produce a lot of cash flow. So I just thought it was really interesting to hear the narratives being put out in the market versus the reality of what was actually happening at most long short hedge funds.
Yep.
Now, what was happening with the quant funds, I don't know. They may have been getting blown up on some stuff, but that's a total black box that none of us really know what's going on. So that's a whole nother story. But
yeah, wild. So I guess we'll see what happens over the next few weeks as more information comes out. If there was any foul play between Robinhood and Citadel, I think there's so many lessons to take away from this, and hopefully we hit on a few of the most important ones. But is there anything else you guys want to mention before we move on to crypto?
Oh, on Citadel, by the way, just real quick, one other interesting detail is that the Citadel Securities, the market maker, is actually a separate entity than Citadel, the hedge fund that takes directional positions. So that was kind of another misunderstanding is like, I don't know how Citadel, the market making company, talks to Citadel, the hedge fund. Maybe there's some shady things happening there. We've all wondered over time, but they're actually two separate entities. So they do two separate things. And so everyone was talking of Citadel as if it was one entity, but it's not. So there's a lot of details that went misreported in this, and a lot of, I think, things that were being said that were just so far off the basis of fact that that's a whole nother dynamic to the situation that makes it more dangerous for retail investors who don't have that, understanding of what's really happening on the other side of the trade.
Mm-hmm.
I don't know how many people that watch our show would have been, buying GME kind of at the highs, but I figured it might be worth taking a moment to kind of talk about the possibilities from here for people that are actually stuck in this trade. I know that, in my opinion, I think that there could continue to be some volatility in GME. I mean, we're kind of even seeing that today as it kind of bounces back. And I'm not quite I'm not quite sure how the short interest looks right now in real time. It has come down a lot as far as we know. But if there are, some shorts left, it could help kind of stay elevated at these levels, have a little bit of volatility. But I do personally think that any spikes that we do see are going to be sold into pretty quickly, because now you've got a whole slew of bag holders from the 400 plus, range, people that were buying there. So I tend to kind of be in the camp that could see volatility. Could it pop again? Sure. But I do think that any pops might be sold into pretty easily and quickly as bag holders try to get what they can out of it.
Yeah, in certain markets, we call this either the wall of death, the red wall of death, or just the wall of bags, right? That's why, like in the previous Bitcoin bubbles that we've had, anytime you get that phase 4 where there's a fast sell-off, bounces are usually just dead cat bounces that get sold into because of bag holders. So yeah, anybody that was up here buying in the multiple hundreds of dollars is now going, holy shit, how do I get out of this and retain as much capital as possible? That's the risk of buying parabolic moves.
And I do know somebody actually that was up like 60 grand, from the 40s on GME. And I remember they didn't want to sell anything. They didn't want to get out of it and take their profit. And those are the people that unfortunately are going to lose any gains that they had if they're not careful with the way they manage it from here. So I don't know,
Groupthink is a hell of a drug. That's all I know about that.
Yeah, man, it's something.
All right, let's go ahead and move on to Bitcoin and crypto. We've actually got some movement in a couple of things today. Let's see, Travis's favorite person on the planet, Elon Musk. Look at his profile on Twitter. All it says is hashtag Bitcoin.
What a tease.
What world are we living in, man? This is funny. So Travis, you were speculating a couple of things about this. What do you think's going on here?
I think Elon has either bought some personally, and maybe also he's put some on Tesla's balance sheet. We won't know, I guess, until they file their next quarterly filing. But he was on Clubhouse, the new kind of hot social media app, which is basically it's kind of like a live podcast or like a live audio room that people ask questions and talk to each other, and especially famous people are on it and doing interesting things with it. But he was on a Clubhouse the other night, and someone asked him about Bitcoin, and he said something like, he started it with, I have to be careful about what I say here, or something like that, which led me to think, okay, so he has a position personally, or his company, or both, because he's got to be careful to not, violate any securities laws. Okay. So my speculation with that comment and the fact that he put it in his profile leads me to believe that Elon has some Bitcoin exposure, either personally or professionally, or both. So I think that's pretty interesting, because as we know, richest man in the world now, at least on paper, and of a cult meme lord figure in society now is now behind Bitcoin. So
yeah,
I don't know if that's good or bad, but it's certainly a big deal, I think.
The millennial 60-40 is Tesla and Bitcoin. So I I'm speculating that he possibly put it on Tesla's balance sheet. But I feel like the people that are long Tesla would probably really love that idea. And I don't know what that would do for the stock. It's definitely an interesting thought.
Yeah. Well, this is what happened when he started talking about it, or it was either when he mentioned it or when he put it on his profile. Bitcoin popped from like 33K up to over 38K, and then quickly came back down. So it looked like it just kind of cleared some stops of some shorts through here. So we're still kind of squeezing over the past week. 30K has defended like 3 or 4 times now, and it looks like we've actually turned this downside resistance level from resistance into support. And we've got a few key markets that are at really kind of pivotal inflection points right now, we could say. So like taking a look at Ethereum. So just disclaimer, I am heavily long Ethereum. We first started buying back here in the 300s, built into a pretty big position through the 400s. And then I've actually been adding here in the 12 to 1400. So as of like right now, we are challenging the all-time high around 1500. And if we zoom out, you can see what this picture looks like. So in 2017, we had a big move where we went from basically nothing to 1400 in a year, and then came all the way back down, and then had a couple of years of sideways accumulation action. And I didn't know that price was going to go up this fast. But, whenever we shifted in September and we started buying here, we had a lot of conviction that this was going to go higher. So it's really started to take off right here. If we, again, take a look at a daily chart, you can see we've been consolidating around 1400 really since early January. So we've been consolidating for about a month, holding higher lows into this area. So again, you guys that have been watching the show or that are in our community, you know that we don't make predictions. Predictions are worthless. The only thing that matters is what skin do you have in the game? Are you in a position or not? If you're a talking head on CNBC and you have no skin in the game, shut the hell up. Your opinion doesn't matter. If you're long, you're long. If you're short, you're short. If you're just going to yak and you're not going to put money where your mouth is, then go away. That's my attitude. So predictions are bad, but there's 3 P's that we do care about, which are called possibilities, probabilities, and plans, right? What are the possibilities? What's everything that could happen? What are the probabilities? What's most likely to happen based on odds? And then what are our plans around all of those scenarios, right? That's how real traders think. And
preach.
Hey, so that's really what I'm thinking here is like, look, we know what Bitcoin did when it was challenging its prior high. We have a lot of momentum. We have a bullish price pattern into resistance. The bear case here is that we work into 1500, spike up and trap and consolidate for more. But again, I have a heavy position. I could lose a lot of money. I'm not a financial advisor. Please don't blindly follow me into this. This is just what I'm doing. But anytime I have a lot of conviction, I go in heavy. And my goal is to trade less, meaning trade less frequently and not chase a whole bunch of bullshit, be more concentrated in quality projects and hold for longer term moves, not scalp in and out of all these little moves. That's my strategy. It's developed over the past 20 years. That's what works for me. Do what works for you.
Well said.
Yeah.
It is a beautiful chart, I will say.
It is. It's at least where we are right now. Again, it could change on a dime, but looking pretty bullish. Also, we've had some other markets that have gone absolutely crazy. Uniswap was one that we were buying down here in the $5 range. Recently topped out around $20. I'm still holding about half of this. As you guys know, I like to scale out into strength. So we're getting some pretty big range bars in between like 15 and $20 up here on Uniswap. But I'm a fan of exchanges. I think that, anything that gets a piece of every transaction is a great business model. I'm a fan of decentralization when it comes to exchanges because as we saw with the Robinhood fiasco, we don't want to have counterparty risk. So liquidity pools are, I think, where markets are headed. What else we got going on? So we've got SNX, that's been working, a handful of other things that have just been consolidating, but really I think it's all eyes on Ethereum right now. And obviously Bitcoin to see if we're going to get continuation or just more consolidation. I'm actually a fan for the longer that Bitcoin can kind of hang out and consolidate, the better that is. So yeah, all eyes on this kind of 30K zone.
It looks like a pretty healthy trend so far. So it's holding up really well.
Yeah. We'll keep our eye on it. I think kind of if we kind of switch gears and look at the macro picture now, the other major thing that people are thinking about, obviously, is the pandemic. And Travis, you wanted to take a look at this. I guess case numbers are dramatically getting crushed because, at least in the US, because we are doing over 1.5 million vaccines a day.
That's right. Yeah. So, you now also, unfortunately, have a large population of people that have had COVID. What is it? I think 20, 30 million now. And then also, so you have people that have already had it and now have antibodies. And then you have a significant increase in vaccinations over the last few weeks. So I think last I heard, it was about 1.3 million vaccinations a day here in the US. So that has led to a pretty rapid decline in new cases and new hospitalizations over the last 2 weeks or so. So that's good news. Obviously, that's getting the curves headed in the right direction finally. And, I think that has pretty big macroeconomic potential implications if this continues. So, we've long been waiting for the recovery, for, things to kind of normalize. And I think the path looks like it may be headed in that direction here, maybe even a little bit faster than some people thought, because I think a lot of people thought this wasn't going to happen until like late summer. But I think we're at a point where in a month or two, the curve could be much lower and flatter than we've seen in the past couple of months.
The numbers are still high as of right now. It's still about 150,000 cases a day. So we're not out of the weeds yet. And deaths are still, if we look at the 7-day moving average, still above 3,000 a day.
Yeah.
Which, by the way, I just got to say, if you guys remember back here in the summer of last year when deaths were, getting below 1,000 and everybody was like, oh man, COVID's over. It's not a big deal. This is the repercussions of that, right? That mentality of, oh no, the deaths don't matter. Cases are going up. I just got to say, I think about these people that died unnecessarily. Again, I don't want to get political, but these are real, these are real bodies, and there's over 400,000 of them in the US. That's something I think we should think about.
Yeah. The only hope that I have here is that, that for a future event like this, that we have some ideas of how to, tackle this better next time, because it was horribly, at least here in the US, horribly managed on so many levels. But again, I'm an optimist by heart, so I'm looking at the trend of the curve, and I like what I see.
It is sounding like this could be with us forever. I was listening to the Moderna CEO talk about it, and they're basically working on, or going to be working on, a flu/COVID shot. Mm-hmm. So it would be together every year, and that you would take it. So I think that, at least from what I'm seeing, this isn't going to just go away and be gone forever. But it sounds like it'll be manageable, and we'll be able to start living our lives again. And, I think people are just really, really excited and ready to get out in the world again.
Yeah. I know we've, between the three of us, we've talked about this quite a bit, how we're just expecting maybe by this spring or summer that there's just going to be a rush of people wanting to travel and
spend money,
go to restaurants and spend money. Yeah. What does this look like for you guys in the stock market with maybe inflation? What are you guys thinking about? Because if we look at some stocks here, you can see there's some airlines that are already back to almost all-time highs, like Allegiant. You've got other stocks that are still kind of mid-range, like American and Delta. But what do you guys see as kind of the I guess reflation back into normalcy?
Go
ahead.
No, I was just going to say, we've talked about this before, how a lot of the recovery plays the stocks have come back and recovered with a lot of strength. So in terms of the stock market, there aren't really that many places to go right now with asymmetrical risk to reward because of that recovery in the stocks. There are a few places, like maybe cruise lines, if you want to take, if you want to take that bet, those are still kind of down a bit. But go ahead, Trav. I know you go ahead and finish your thoughts. Sorry, I didn't mean to cut you off.
Oh, not at all. No, I think I think that's right. I mean, there are specific stocks and sectors that a lot of people are focused on for recovery, but actually what I've started thinking about lately, since a lot of those are already, I feel, played out in some sense, the stocks that could benefit from higher inflation expectations, because, I think we're going to have a kind of a unique storm of events here potentially later in the year, maybe by mid-year or so, where you do have you have a tremendous amount of pent up savings. I know that we've talked a lot about how a lot of people are hurting and the unemployment rate spiked, but among people who remained employed, the savings rate in the US really spiked to abnormally high levels relative to the last 10 years. And so there is a pent up savings glut. That's a great chart there from Tim Dewey from the University of Oregon. And it suggests that, so there's a lot of pent up savings, probably a lot of pent up demand for people getting out there, going to concerts, traveling, emerging into the world again in a more normalized way. And that's going to mean significant tailwinds for the economy. And then you also have supply chains that are still trying to catch up. So you've got, a lot of potential inflation there in the manufacturing supply chain. And you add on top of that potentially asset prices continuing to increase with, strong stock markets, and you've got a pretty perfect storm for higher inflation expectations. The Fed last week was saying, look, we're still sticking to our strategy. We want to bring unemployment rate levels back down. We're going to potentially let the economy run a little bit hot and keep rates low for a long while. And so that to me is going to lead to higher inflation expectations, perhaps actually higher inflation. And so I'm starting to think about, well, how are investors going to be positioning? Because once you start to see 2, 3, 4% inflation, if it does happen, then people start to extrapolate that. Well, what if it goes to 5? What if it goes to 6? What if it's at 7? What if this inflation, which has a tendency once it gets going to really persist higher, what does that mean for portfolios and for investors' expectations? What sectors will benefit? So that's kind of what I'm thinking about. There's obvious plays like crypto and gold that are traditionally places you'd want to go if you think inflation is headed higher. There's stuff you want to avoid, like long-term government bonds, because as rates rise, the bonds go down. So there's places like that where you might want to have less exposure if that's your view. There is a case to be made here that if inflation spikes too fast, that could actually pressure stocks, because that could actually put pressure on broad markets, because as interest rates go higher, that means the rate that we discount equity cash flows goes down and the valuation multiples go down. So it may be, all of this may really depend on the speed of the inflation expectations changing. So I'm not worried about hyperinflation or anything like that right now. The government still has plenty of tools. They can, raise rates a bit if they need to, et cetera. But I am thinking about some of the inflation plays for later this year. So gold's kind of an interesting one. I'm not usually a huge fan of gold, but if you look at that, it's kind of in a little bit of a sell-off, and, people have kind of lost sight of it, given what's been going on with crypto and silver, people trying to stampede into silver to try to squeeze it. But
yeah, that was another narrative that was playing out yesterday. This was, I think, front page of the Wall Street Journal today too. I saw a lot of people bragging on Twitter. Oh, we called silver, and then it gapped up, and then look today, it's down 10%. Basically,
I think WallStreetBets is standing down from silver, is what I heard.
Yeah,
they told everybody to stand down because a lot of funds were long.
Yeah.
Because of the inflation expectation.
Go down the rabbit hole of all the conspiracy theories of, oh, we've got imposters in the WallStreetBets subreddit now, and what a weird mix of market participants we have now, right? Like, things are so dramatically different today than they were even just a couple of years ago.
And what a weird trade to try to, this idea that now you've seen what's happened with GameStop, that you're going to just kind of run with the stampede. That's kind of a weird investment thesis. Like, if you're making your investment decisions based on this like social media herd, and trying to collude on things, that can work obviously. But for me, that's just not an investment thesis that has a whole lot of like actual, high probability success behind it. It's something that is, I think, something that people need to be careful of. Like this idea
I just felt in my soul, like 20 people just get triggered by what you just
said. Oh, I'm sure.
I mean, let's call this what it is.
Yeah.
But let's call this what it is. It's a pump and dump.
Exactly. Yeah. Like, it literally walks like a pump and dump, smells like a pump and dump. Like, okay, yeah, maybe the dump part, because they weren't telling people to sell. They were saying, don't sell. Like, they basically pumped it. They didn't care what price people were buying it at. They were like, just buy. and hold. But they pumped it, plain and simple. And what happens when you pump something? Usually, it corrects. It must come down eventually. So
when you have a whole bunch of anonymous people on a message board saying, I'm not going to sell, you don't sell. Yeah, right, dude. This is trading. Those people are not your friend.
Well, the other thing too is you don't truly know how much money people are throwing into these stocks, right? Like you don't know how much actual capital. Okay, I don't know, 4 million, 8. I don't know how many people are in WallStreetBets now at this point.
8 million now, as
8 million now. Okay, you don't really truly know how much capital is backing the trade, right? Yeah. And so, sure, it's probably a lot of money, but at some point, the capital dries up. And how much can How much can they just keep buying stuff to keep it propped up, right? Eventually, the buying demand will it will decrease. So I don't know. That's the other thing is sure it as a collective we know pumps can happen, surely, but that's why we call them pump and dumps, because usually there's always a dump behind the pump.
Yeah. And the coordination problem is getting more difficult as that community grows. So when they had this tight little community of like-minded people, it was one thing, but now that there's 8 million and a lot of those people are lurkers that are now seeing WallStreetBets as some, group of geniuses. There are all kinds of people and investors with different levels of sophistication and capital and strategies. And so it's getting much more difficult to actually coordinate a group like that. And, I don't think we're out of a world in which social media plays a role in pumping certain stocks. I think that's probably with us now for a long time, but I think the coordination gets more difficult. And I think, there's so much more noise now there. And if that's the basis of again, I'm going to go back to my original thought, which is if that's the basis of your investment strategy, then you need to take a serious look at your investment strategy.
It's the same mentality as the guys that join the penny stock trading rooms. They look at gurus and they go, okay, just tell me what to buy and tell me when to sell, and I'm going to blindly follow you. That never works for so many reasons. Even in our community, we tell people like, look, guys, do not blindly follow us into trades, because if you don't have a plan for how you're going to respond to every possible outcome, and you don't understand why you're in something and how to think like a chess player of all the possible outcomes, you're not going to manage it effectively. It's so easy to screw up a good trade by mismanaging it.
Mm-hmm.
Yeah.
So I don't care if you're on a message board like WallStreetBets, if you're in a trading room, if you're on Twitter trying to follow people, you have to come up with your own approach, and you have to take 100% responsibility for everything you do, because the markets don't give a shit about you. They really don't. They don't care what your average price is. They don't care what your financial goals are. They don't care that you're putting every last dime leveraged up on some moonshot trade that could potentially, make you homeless next week. Like the markets are a competition. And when you understand the arena that you're playing in and the sharks that are in there with you, if you go in expecting to get rich quick and you look at these people on WallStreetBets that they're propping up as like godlike figures, it's just a dangerous game, man.
Well, I think that eventually we all, we were all beginner traders at one point, and we had to learn lessons the hard way. But hopefully people that watch We Talk Money can kind of get ahead of that and avoid, catastrophic losses like people are experiencing now with GME. But I think that, everybody learns, and what this has done, this movement, so to speak, is it's brought a lot of people into the markets. And, I think that's going to be a net good thing in the long run. And, hopefully people learn their lesson, and they try to do better, and they try to refine their strategies going forward.
100%. Yeah. I mean, the good side of this, and I don't want this to be too like gloom and doom, but look, when people lose a shit ton of money, we got to look at why, right? But on the positive side, it's true. A lot of people got introduced to the markets for the first time this week, this month, this year, right? And just like most people's first introduction to the markets, it's usually a spanking. It's usually getting your ass handed to you and learning that, oh, the markets aren't that easy.
Yeah.
It's actually better if your introduction to the markets is getting your ass handed to you, because an even worse scenario is you get in and you get lucky and you think you're a genius, and then you increase your risk tenfold and you end up blowing out your account.
Well, that's kind of what happened. 2020 kind of made everybody think that you can't lose in the stock market. Stocks only go up. I mean, honestly, it's kind of the precedent that was set. So I do know a lot of people that got really, really lucky in 2020, and they probably went into this thinking they can't lose. And obviously, like, we don't know what's going to end up happening in the end. This thing could end up, how funny would that be if it actually did end up, running to 1,000? I don't think it's likely, but we never know, right?
Yeah, that's the thing.
But
they'll get some snapback rallies, though, at a minimum, I'm sure, right?
Yeah, like I said, and there probably will be a lot of backholders selling into the pops. And, we've seen this movie too before. But I just hope that people that got caught up in this at least take it and learn a really important lesson, that going forward, they won't make that mistake again.
Awesome. Well, I think that's a good place to wrap it up. I know we didn't get to any questions this week. A lot to talk about. Crypto markets are moving. Obviously, a lot going on in stocks. Got the vaccine coming out. Hopefully, we're going to get some even more positive developments in the kind of the global macro picture in the economy here in the U.S. Any final thoughts for today, guys, before we head on out?
Oh, we do have some earnings today after the close. Google and Amazon, big earnings. So that's something we'll be looking at, and we can chat about that next week.
Yeah, we almost forgot about the fact that it's Q4 earnings reporting season.
I know, right? Like, no one cares about big tech anymore.
Yeah.
Which, by the way, have had phenomenal earnings results so far.
I know.
Facebook,
I actually,
AMD, Microsoft, all fantastic results so far.
But the market just isn't caring. All it cares about is GME. So,
well, I mean, big tech just keeps trucking along. Google just hit a new all-time high today. Tesla's looking strong. What else?
Is Tesla going to hit $1,000 a share? Yes or no?
Of course. Look how close it is.
On what time frame?
Yeah. Do a weekly call off.
Honestly, I'm gonna give it. I don't know. I don't know. I need to think about it, but it is holding up pretty well.
Yeah, we need a parabolic blow off top here. All right, guys. Well, thanks for watching or listening today. Go to wetalkmoney.com, submit a question for the show, which we will get to next week. And stay safe out there, guys. A lot of volatility, a lot of wild, expensive lessons being learned.
Manage your risk.
Stay in the game. Learn to survive, then thrive.
Yeah.
Don't get eaten by the sharks, then you'll become one.
All right, y'all.
Thanks for joining me today, guys. We'll see you later.
See ya.